Folks, today I'm going to talk about the active lifestyle trend that continues to profit. Now, over the past few months, the tech-heavy NASDAQ 100 index has become a bit overbought, and many investors and traders, including this one right here, are looking for other sectors for upside momentum plays. One sector that stands out is the active outdoor lifestyle sector. I told you so a few months back. It's looking really solid, especially in light of the current COVID-19 social isolation, or what we call the new stay away from the big crowd environment that many have become accustomed to in recent months. Folks, people are becoming sick and tired of sitting at home. Many people enjoy exercising or going for a hike outdoor. It's safe. You won't catch COVID-19 if you're just by yourself or with your best friend or whatnot and you're just walking around. It's safe. Exercise is seeing an uptick, and active lifestyle trends have been picking up for years now. Most importantly, some major analysts, including Baird, see this trend continuing. According to Baird, a normalized environment by the second half of 2022 supports a recovery of 2019 earnings by early to mid-2022. They've got this down to a science at this point. Baird further noted that three stocks could see inventory further moderating and shortages likely in some categories. This is really important. For earnings season, the investment firm giant is expecting the active lifestyle stocks to see revenue down only 15 to 20% year over year. That's a very sharp improvement from last quarter's negative 41%. And much, much better for certain names. And those are the three names that I'm going to give you right now. Now, I've reviewed and gave buy recommendations for these three stocks a few months back. And today I want to reiterate coverage on them for traders who didn't get a chance or didn't previously see my videos or previously were fearful of taking advantage of them. The first one is Crocs, ticker symbol Crocs, a world leader in innovative casual footwear for men, women, and children. Crocs offers a broad portfolio of all seasonal products while remaining true to its core molded footwear heritage. All Crocs feature Crocs-Lite material, proprietary, revolutionary technology that gives each pair of shoes very soft, that comfortable feel, odor-resistant qualities. Thank God for small favors. 5-year return, 177%. 5-year earnings play, 177% as well. Earnings per share growth versus previous quarter, 359%. Earnings per share growth versus previous year, 83% growth. And most importantly, price action is shrugging off any major or minor correction that we've seen in recent months as the stock continues to trade near all-time highs almost daily. Moreover, there's even more. The company's in the Russell 2000, which is undervalued in relationship to the overall stock market and could cause extended upside in the coming months, depending on the political outcome of the election, which I'm not going to get into right now. Lastly, the company has 4 quarters of positive earning estimates ahead of earnings, which typically leads to strong accumulation from institutional investors around the globe. I like Crocs, and I really like it a lot. The next stock on my short list is Decker Outdoors, ticker symbol DECK, global leader in designing, marketing, and distributing innovative footwear, apparel, and accessories, development for both everyday casual and high performance like running and hiking. The company's portfolio of brands include Uggs, Koolaburra, and Hoka. Decker's brands are sold in more than 50 countries and territories throughout selected department stores and specialty stores. The company owned and operated retail stores and online as well, including their website. 5-year return, 359+%. 5-year revenue, 17%. 5-year earnings, 106%. Earnings per share growth versus previous year, 58%. The earnings surprises have been massive the last 4 quarters, well above expectations. And get this, their Hoka shoes brand have become some of the most popular sports shoes in history. Just ask my wife. She probably has more pairs than you could. She collects them. She loves them. Relative strength has been super solid, with the company making highs almost daily. The last stock on my list needs no introduction. I'm talking about the big one, Nike. Nike, NKE ticker symbol, world's leader, designer, marketer, and distributor of authentic athletic footwear, apparel, and equipment for accessories for God only knows what. Wholly owned Nike subsidiary brands include Converse. I think they may still own Hurley, or they just might have sold it. And it distributes surf and youth lifestyle footwear, apparel, and accessories. Nike is going strong, especially with the stay-at-home, stay-away-from-everybody pandemic. Earnings per share growth versus previous quarter, 286%. Earnings per share growth versus previous year, 10%. In this economy, can you imagine that? 5-year dividend growth, 78%. The stock is a mature leader, but appears to be seeing strong upside due to the COVID stay away from society climate and the fact that they went into a deal with Amazon to bypass traditional retailers a few years back, which caused increased sales and global demand. Expect more upside from the world leader in active footwear around the globe. Ticker symbol NKE. I hope that helps. Most folks don't know this, but in January 2021, a brand new technology worth $15 trillion will be switched on and bring the 5G rollout to a screeching halt. Today, a veteran disruptive tech investor is putting the expertise to work to reveal all the information you need to cash in on this. And I mean cash in big. Those who take early action could see gains like 515%, 960%, even 1,267%. What are you waiting for? Click on the link below to see the technology that could literally kill 5G. Do it now.